Hello and welcome to another Microsoft Excel for Accounting video tutorial on completing the accounting cycle. So we're going to be showing you the closing steps. And I've got a little PDF on my website that shows you the closing steps. The first closing step is to close the revenue accounts. So we're going to do number 11 on page 252. So what we need to do is we need to look through these T accounts that they have on page 11, and you need to find the sales. And the sales are a credit of 45,000. So what we need to do is close it. We need to zero it out. So we're going to put in 45,000. And to balance that out, we're going to put in 45,000 into the income summary. And that is for closing the sales or closing the revenue. I think I'll call it closing revenue because it is possible in some situations that you could have more than one revenue. Now, the second step is to close the expense accounts. And in a journal, we always put the debit first, but we actually can't do the debit until we know how much it takes to close and zero out all the different expenses. So expenses are normally in a debit. So to close them out, to zero them out, we need to put the same amount they have. So you look in the T accounts and you're going to find the first one, which is advertising expense, and it's 2,000. In the T account, it's on the debit side, so we're going to put it on the credit side. Then we're going to go to the auto expense. We're going to put in 1,000. And then we're going to put in a general expense. We're going to put in 3,000. Then the rent expense is 5,000. And then the salaries expense is 24,000. Now the debit for that goes into the income summary, and that debit will be the total of all those. So I'm just going to auto sum, and I'm going to auto sum these ones. And that will be 35,000. Now the third step is to close the income summary. And the income summary is going to be, we need to get that to zero. Now the income summary, we already know the income summary has a credit of 45,000 and a debit of 35,000, so it must have a credit of 10,000. So then we've got to put in 10,000 in the debit side. So you want to debit the income summary to zero. And then, because we're debiting that, we've got to credit capital to balance that out. So you do exactly the same amount. Then, capital, you need to take care of drawings. So our capital is normally a credit. So we will debit the capital if we have some drawings. So it's actually not good for it. Now, if we look on the T accounts, they have a drawings of $3,000. So we've got to zero out that with a credit in the drawings. And then to balance that out, you've got to reduce your capital by debiting your capital. Should say close drawings. Now we've got to start journalizing these. So we'll start to look at the journal here. And so the first thing we need to do is debit sales for 45,000. So I'm going to write 45, 1, 2, 3. And that will continually be a CR even though it's equals this one minus this one. Enter. And this should be called closing sales. Then we go back to our journal, and our income summary is got to get credited 45,000. So we head down to our income summary, and it had nothing in it to start with because it is only used at the end, and we go equals 45,000. So that's closing of sales is what we did there. So now we've got this and this taken care of. So now we have to debit income summary 35,000, and that is because of, and I should have had a spot here, right click, insert. This should say closing expense accounts, and that should be over by 1. The first thing I'm going to do is I'm going to debit the income summary, and then we're going to say closing expense, and that's going to be debit that of 35,000, and we're going to go equals 45 minus that one, enter, and it's still a credit because it's still a credit of 10,000. Even though we debited, you still put a credit there. Same date again, and we can move up, and now we need to close all of our expenses. Okay, so you just go to every expense and you're going to credit every one. So we've got income summary, sales, and now we've got our expenses. So we're going to write in 2,000 equals this minus this, enter. I'll put in the closing remark after, and then I'm going to say 1,000 equals that minus that, enter. 3,000 equals that minus that, enter. And all of these were debits, and even though it gets zeroed out, and so now we've taken care of this, and we've taken care of all of those. Now we need to debit our income summary, and when we debit our income summary, so basically you need to figure out how much you had in your income summary. It's a credit, so we need to debit it 10,000 more equals this minus this, and that will be called closing income summary. So then we're going to credit 10,000, and that will continue to be a credit. It's going to be equals this plus this, enter. And that was because of closing income sum. And again, I'll add those dates at the end. Now, so that's taken care of. Now, we've got the issue of drawings. So we need to get rid of drawings. Drawings is normally a debit, so we have to credit it. We're going to go down to my drawings. So we're going to credit it with 3,000. And we're going to go equals this minus this, enter. And we're going to say closing drawings. But when we close our drawings, we need to, because we credited our drawings, we need to debit 3,000, which is equals 70,000 minus 3,000, enter. And that's and then the fifth thing of completing the accounting steps is to do a post-trial balance. A post-trial balance includes assets, liabilities, and capital, does not include drawings, income summary, expenses, revenue, because they've been zeroed already. Now, I can't do that on question 11. It doesn't ask for that because it didn't give us the assets and the liabilities. So that is how you do the closing steps for completing the accounting cycle. Thanks for watching.